Sometimes we see the market move violently or explode with momentum out of nowhere. Have you asked yourself why? It is not random. It is not magic. It is demand and supply. Demand and supply are the hidden zones where the big institutions and banks enter their trades. The problem is some people think that support and resistance are demand and supply. Demand and supply are completely different from support and resistance. If you go to Google and type demand and supply, you'll see support and resistance instead. It is because some people don't have the right knowledge of what demand and supply is. In this video, I'm going to show you how to mark out the correct demand and supply, how to enter the trade, how to exit, and everything you need to know about demand and supply. So I'm James, I'm a forex trader, and I want to teach newbies how to trade like pro. All you have to do is to click the subscribe button, turn on the notification bell, and like this video so you can get notified whenever I drop a new video like this. There are many things you need to be a profitable trader. 1. A reliable broker or exchange. Here I recommend XAUUSD. XAUUSD have tight spread with mobile friendly. So if you don't have a broker or you are using another broker, I recommend XAUUSD. Use the link in the description of this video, sign up on XAUUSD, verify your account, and start trading. Another thing you need to be a profitable trader is a community, a trading community that can guide you and put you in the right path. We already have a trading community. Use the link in the description of this video to join the community. There we share trading tips, trading guides, and more things that can help you become a profitable trader. Without further ado, let's jump in. Some people tell you that support and resistance are demand and supply. They are completely wrong. Support and resistance are areas in the market where there are multiple touches. Demand and supply don't necessarily have to be multiple touches. I will explain. Demand is not just where buyers step in. It is a zone where big institutions are loading up, preparing to drive the price up, obtain living imbalances, and explosive move. At the same time, supply are not just areas or zones where sellers step in. They are areas where big institutions drive the price lower, often creating imbalances in the market. The earlier you understand this, that is the more you can trade like a pro. And this video can help you become a profitable trader if you trade it the right way. Now we are going to jump into our charts to see the clear difference between these two, support and resistance and demand and supply, and how to trade them wisely. Don't forget, at the end of this video, we are also going to share some tips that can help you trade demand and supply like a pro. So ensure you watch it to the end so you don't miss all the necessary guides. Now let's jump in.
Now let's talk about what makes a correct demand and supply zone. You can't just pick any zone and call it demand and supply. It must meet certain criteria. And the number one is clear price structure, which means that a demand zone must have strong bullish moves, okay, and that must occur after a period of consolidation. That means a strong bullish move after a period of consolidation is demand zone, and a strong bearish move after a period of consolidation is a supply zone. So a correct demand zone and a correct supply zone must have strong bullish move and strong bearish moves respectively. You understand? So looking at this chart now, you see strong bullish moves. This is what we call demand zone, and this is what we call supply zone. So another thing that makes a correct demand and supply zone is freshness of the zone, which means a fresh zone is one that hasn't been retested or touched since it was formed. The more times price touches a zone, the weaker it becomes. This means that a demand and supply zones are very different from support and resistance levels. You understand? Because support and resistance levels are areas with multiple touches, but demand and supply zones are zones with strong moves. You understand? Because the logic behind demand and supply is to find when the bigger institutions or big guys have entered the market. The strong moves in demand zone and supply zone means that strong guys have entered the market. So that means that a demand and supply zone must not necessarily have multiple touches, okay? So the more fresh the zone, the better. And another thing, which is the most important thing, is strength of the move away. A strong impulsive move must have long candles, little pullbacks or wicks. So now when we talk about demand and supply zones, these zones must have strong impulsive moves, and not just moves, they must bring out imbalances in the market. So with these criteria, you can see that this is not demand zone and this is not supply zones. If you go to Google and type demand and supply zones, you will see these pictures. These pictures are what I got from the browser. They are completely wrong. These are not demand zones and they are not supply zones. Why? Because this is not a fresh zone. And also, some of them don't have strong bullish moves. And this one is a picture I got from Instagram, and it is completely right. This one is correct. Okay, this is what we call demand zone, and this is what we call supply zones. As you can see, they are fresh zones. And as you can see, the strong of the move away, the strong of this bullish candle, and the strong of this bearish candle. You can screenshot the picture and save it. So now we are going to go to our charts to see how to spot the correct demand zones, the correct supply zones, how to enter the market, and how to exit. So to trade demand and supply zones accurately, the first thing is to identify the correct market structure. Looking at this 4 hours time frame, you can see that the market is bullish. Here, the market is creating series of highs, series of highs, series of highs. Okay, now, and you can also draw a trend line here. This simply means that the market is bullish. It is very simple. Just keep it simple. Now, the next step is to go to your favorite time frame to find or to mark out supply zones and demand zones. But since this is uptrend, we are only going to focus on marking out demand zones. So here is 1 hour time frame. Looking at this, you can see the trade I took last week. And how did I take this trade? So you can see here, the market made drop, base, rally, and you can see the momentum of this rally. It's very strong bullish. Whenever you see this strong bullish candle, mark the origin of the strong bullish candle as your demand. And also, as you can see, this bullish candle broke structure. Demand don't necessarily need to break structures, but the most important thing is the strength of the move. The strength of the move. And as you can see, this is a very fresh zone. It is a very fresh zone. That's why I marked it out as demand zone. So once you spot this type of demand zone, just place your entry immediately at the beginning of the demand, and your stop loss should be below it, and your TP should be the next resistance or the next key level. Before you take the trades, the first thing you need to do is to wait for confirmation. There are many confirmations you can employ to your trading strategy, and you will increase your winning rate. One of these confirmations, and that's the ones I use, is W pattern for buy and M pattern for sell. So all I have to do is to wait for W pattern here before I take the trade, because I'm looking for buy and I want a confirmation. Understand that if you don't want a confirmation, you can enter the market immediately. The price comes to your demand. But if you want confirmation, then you need to watch out for this for buy and this for sell. That means you have to watch out for this in demand zone and this for supply zone. Okay, so now if we go to our 15 minutes time frame or our 5 minutes time frame, you will see this confirmation. Here is our 15 minutes time frame, and as you can see, the market made a drop here, pulled up, and made another drop, then pulled up. Now this is the W pattern I told you. So if the market break this like line, enter immediately and target the next high, which is this. So if you want confirmation, you can wait for W pattern in demand zones and M pattern in supply zones. So here is another demand zone in this GBP card as well. And as you can see, the market dropped, rallied a bit, and what? Boom, created a demand. So when the market created the demand, it came back to retest it, and boom, it moved. This is why I say that demand zones don't necessarily need to be fresh zones. They can be fresh zones, but they don't necessarily need to be fresh zones. So here is EURUSD 1 hour time frame, and as you can see, the market rallied up, then based here and drop. So once you see rally based drop, it is what? Supply zone. So you mark it out as supply zone and wait for the market to come back to it, and you take your sell. So if you have a question, you drop in the comment box. Remember, you can use this example for both demand zones and supply zones, and you can use it both in forex, stocks, indices, and whatever you want to trade. Thank you for watching, and don't forget to join our community for more trading tips like this.
One of the secrets that can help you trade demand and supply like a pro is, in uptrend, trade demand, and in downtrend, trade supply. Don't trade supply in uptrend, and don't trade demand in downtrend. So all you have to do is to mark out your demand and supply in a higher time frame. If it is uptrend, mark out your demand. If it's in downtrend, mark out your supply. That means in uptrend, if you see a supply, ignore it. All you have to focus in uptrend is the demand. Once the market comes to that demand, look for buying opportunity. In downtrend, don't look at demands. You can mark out the demand so that it can be your exit, but your supply should be your entry. So in uptrend, always look out for demand. In downtrend, look out for supply. Also, don't forget that there is no strategy that works 100% all the time. So you apply risk management. A trader without risk management is a gambler. Risk management is one of the big tools that can help you become a profitable trader. So at this point, if you have any question, drop it in the comment box. Don't forget, our trading community is there to help you. Use the link in the description of this video to join our community. Thank you for watching. Have a nice day and see you at the top.